Thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, another record high for stocks ahead of a very big week for your money, as Carl was just talking about. We're trading all of that with the investment committee. Joining me for the hour today, Steve Weiss, Jim Lebenthal, Kevin Simpson, and Rob Sechin. We will check the markets here, show you exactly where we are, because we might close above 47,000 for the first time ever on the Dow Jones Industrial Average today. We do have that very big week looming. Let's show you what's going on. We have the busiest week of earnings season coming up. You know about the mega caps. 5 of the 7 are reporting. Jensen Huang gives a keynote on Tuesday. The Fed decision is on Wednesday. The meeting between the presidents, Xi and President Trump, of course, on Thursday. So we got a lot to look forward to. Weiss, I think it's interesting that this market looks at CPI cooler. It's convinced the Fed's going to be engaged, and highly so. It has a ticket to cut, and a ticket to cut multiple times. Your move the other day of either trimming or selling out of Alphabet, as you expressed it, was in part, as you said, to take down your exposure a little bit. This market doesn't seem like it wants to go down.
Yeah, and I should have been clear. Take down my exposure in the assets that basically all have the same end game, which is cloud, which is AI. So I've got large positions, and I haven't sold all of Alphabet yet. I'm probably going to sell it into the earnings. I'm waiting for more of a run, because I'm concerned about search. But I've got large positions in Microsoft, in Meta, in Taiwan Semi. Not as large a position anymore in Netflix, which is separate. And they're all playing the same things. They all trade alike. So I don't need that exposure.
I know, but you were a little bit cautious the other day in the overall market.
And I still am.
Yeah. Why so?
Well, I just think that at this point, the Fed cut is in the market. A couple of Fed cuts are in the market.
Is it? How is that possible, given the move today?
Well, we'll see when they actually do it. I think that today was, the answer is, Scott, these moves perplex me, because you discount the news once, which got us to the level before today. Then you discount the news again when you get news like today, which it was better than expectations, frankly, but 3% inflation is still way above the Fed target. But this continues to be a half-full market. But the risk is in some of those names, not long-term risk, but valuation risk, price risk in some of those names I have. So I have been cutting back. So I have more cash than I've had before, but still, it's about 3-4% cash position. So it's not significant.
All right, who wants the other side of that? Go ahead.
Yeah, I think valuations are a tough timing tool. I think Steve would agree with that.
Yep.
I think we have rate cuts. We have meetings with Xi next week. We have earnings that have come in positive. We have earnings revisions that are headed higher. We have positioning that has moved back decidedly to neutral or slightly under. And so from our lens, the chase is on until the end of the year. We have a lot of liquidity in the markets. You're looking at cash building. You're looking at positioning in gold building, which could arguably be a catalyst given the performance of gold of late to get investors back engaged in traditional equities. And so while I think Steve's right to be mindful of valuation, I think there's other things that are happening right now that are pressing the market higher.
I mean, the market doesn't seem to care at all
about anything,
President Trump's tariff whims or anything, because the economy's good. Earnings are good, and the Fed's going to cut.
Earnings going to be great.
The Fed's going to cut a bunch.
Right. So just so I'm clear, I'm not bearish, right? I'm repositioning. So we'll talk about a move I made before.
Yeah, we have a lot of moves to get to today.
And,
we will.
And that's why I've raised some cash, because I want to diversify the portfolio. Number one, as I did with CAT earlier this year, which has worked out to about 40%. And I'm looking to do that further when I can go bargain hunting. So that's why I won't have the cash. I don't want to have to sell at a particular point in time, and I am concerned about Alphabet search.
I mean, it's funny, those who were looking for a pullback, you had private credit bubble up, and people got a little bearish around that, and other, issues that were out there, what's going on between the U.S. and China, people got a little bearish about that. And then here we are at new record highs. The market seems to brush it off. Those who are looking to find bargains or have an opportunity to buy lower haven't really had the opportunity unless they were as nimble could ever be.
You can't fight this. I mean, I hate the trite sayings that I've been saying for the past couple of weeks, like don't fight the Fed, don't fight the trend. You just got to believe in it. Look at the price action. And by the way, Steve, I understand and agree with your perplexity, to use that word that you used. I'm just simply observing that anytime the market goes down, it doesn't even get 2% down off the high before it gets bought. And I'm not justifying it. I'm saying that's what's happening. If I try to explain it, what I say is there's a lot of cash on the sidelines.
You don't have to feel bad to justify. I mean, you don't have to put a disclaimer out.
No, the reason I'm doing that is because I understand where Steve's coming from. You look at this and you do say, isn't this already priced into the market? But that sort of analysis, the analysis that we all like to do, just doesn't matter. This is a trend is your friend sort of market. And you see it in how much cash comes into the market on the slightest dip, whether it's retail and money market funds, whether it's professional money managers trying to catch up to the benchmark. It just is what it is. Another trite saying. Now, there is justification, and Rob said it, with rate cuts coming, deregulation, and you know what? If you do get a China-U.S. trade deal, we go higher on it. That's just where we are. We'll worry about this in January, but right now the trend is your friend.
Yeah, allow me to remove the perplexity, because you're asking, why is the stock market up today if we've already baked this in? And I think we baked in a rate cut for sure next week, but today gives a green light for another cut in December, and well, to your point, Scott, more cuts next year. I'll make the case that this could be the last three handle we see on CPI. I think inflation could be coming down even lower. And this is all the reason why we're seeing the move today. Plus, next week, we get all these earnings reports, especially with the Mag 7. I just think that there's so much enthusiasm behind this market today, specifically for good reason.
There are those who are thinking, that 3% is the new 2%.
Well, I'm going to tell you something.
It's not going to prohibit the Fed from going.
Shelter is a very important component. That's what you saw today. You said goods inflation, but shelter deflation. Shelter makes up a disproportionate portion of the CPI, and it's going to be in a downward trend for a while. And then you have interest rates coming lower, which is going to spur building activity, which should also ultimately be, from a price standpoint, deflationary, even though it'll stimulate economic activity. And so I think the inflation story, I don't want to say it's dead, but it's at least put behind us for a while, because the tariffs aren't hitting the key goods like gasoline prices, because they're exempt from things like that. And so what ends up happening is goods inflation is really just hitting the high end of the market, which can completely tolerate it because they own the Nvidias, they own everything that matters. So they're ignoring it. And in the consumer economy, which really reacts to rents, right, and gas prices, you're seeing them not react to it either. And so it gets back to this situation where you can continue to have this momentum.
Let's get to, right, we look ahead to what's coming next week. I just want to highlight Apple $6 away from $4 trillion in market cap. So the stock had made a run, and then it had pulled back a bit, but it's ramping again. And it has a tendency to ramp into its earnings print, as all of you know, right? The print's next Thursday afternoon. So $6 or so away from $4 trillion in market cap for Apple. We reported, CNBC, they begin shipping American-made AI servers from Texas. It's an interesting story. Kev, you can have the first crack at Apple ahead of the earnings report.
Well, unlike Google, which you talked about before, and Alphabet, I think the earnings for Apple sometimes is a little bit of a disappointment, where we run up into it and then we sell the news. That wouldn't surprise me here. So maybe I wouldn't be buying ahead of the print, but if you see any pullback in Apple, it's an opportunity to be in the name. The super cycle for iPhones isn't the 17, it's the 18.
Yeah, but the 17's already doing better than
I'm
people
still waiting a week to get one.
thought that it would.
Yeah,
I mean, maybe
crazy.
The risk is to the upside on iPhone numbers in the quarter.
I think you're spot on. I think you're totally right. Yeah, I think
I'm
that's going to be
surprised by the
exciting.
uptake in the phone. I'm a little surprised at that, because it really didn't offer much new.
I mean, there was a lot of pent up. I mean, people hadn't done it in a long period of time.
I think it was time more than product names.
Yes, but that's okay, because I mean, the product is the product. It doesn't need that much additional innovation or whatever. They're going to figure AI out one way or the other, right? Whether it's organic or they do something. And people are betting that if it's this phone, the next phone, a foldable phone, whatever it is, it's time.
And still doesn't cost you anything to buy one.
And just to go back to where we started in terms of valuation, it just doesn't matter. I can look at a 34 times multiple forward on this stock and say that's too rich, but it just doesn't matter. Look at that chart right there. Was just up there year to date. It's going higher. Now, I added to the stock in April during that post-Liberation Day blow-off, and I would take some off. This is a stock that for many of us, you have a core position and then you trim it, but I'm not going to trim it until it starts coming down, and that's probably after earnings, as we've all regarded.
We all face this problem with names like Apple, with names like Microsoft, right? It is hard to be underweight these names relative to the index. Apple because of an exceptional leadership team, but also this product refresh cycle, and you're looking at, we're slightly underweight right now, and it's still a top 5 holding for us.
The problem is that it's at 33 times, which is historically really rich. And the revenue growth that you're getting is not what it was. So the growth rates come way down, and the valuation's gone way up.
That's the whole story right now. That's the tug of war. It's a premium valuation relative to its growth rate. And so what do you do when you've owned it a long time, you have a ton of gains in the name, and how do you manage around that? It is not being sold until year end, if at all.
You wait for it to start going down, period. That's the answer to your rhetorical question.
I don't agree with that. You wait for it to start going down. I think you sell stocks, when it's time to sell them, not when they're turning negative, because then you're catching a falling knife.
You mean a stop below where it is now, right?
That's just not how I look at things. And I don't look at things, relative to the index. I'm in absolute performance is my metric. But what I'd say is that companies like Apple, and I don't own Apple, I've traded it, haven't owned it for a while, or Meta, if they get ahead of themselves in valuation, it's a short-term phenomenon, because they ultimately grow into that valuation.
Meta top pick today, $900. Stiefel, that's reiterated. By the way, Alphabet is at a record high today. 292 is the new target as well at Stiefel. Everybody owns Alphabet. Is there one that you guys are most optimistic about going into the print? You would shake your...
Yeah, it's Alphabet. I mean, and
you're the most optimistic.
Yeah, I mean, look, this does come down to valuation ultimately, and I see this as the most attractive valuation out there. Steve, I was watching the other day when you said, hey, search looks like it's coming down. It may well be. We're not going to know until we get the earnings, and that's going to be a heck of a tell. But I'll tell you what, if the search traffic comes in better than expected on this earnings call, as it did last quarter, this stock is going higher. It still trades at a discount to the rest of the Mag 7, and that's because of the questions that you brought up the other day.
Probably not much of it. I don't know what's the comparison between Alphabet and Meta in terms of valuation, because they got to be close.
Yeah, but if you get another 2 turns, I mean, I think it's roughly 25, 26 times forward earnings. You get another 2 turns on this, it's going to be a 10% higher. It's going to be a $300 stock.
And the other thing behind this too is that Tony Pasquarello at Goldman
26
points out
right there,
that he, like others, you're basically the same.
Yep. No, compared to Apple, it's 34.
No, I'm talking about Alphabet and Meta.
Okay, sorry.
The bias to buy any dips in the cohort itself, that's where he is, and that's, I think, where the broader investor is.
So what's interesting about the Mag 7 is there's only 2 businesses that are going to see earnings acceleration next year. It is Tesla and Microsoft. And one of the big questions remains around Meta. Meta is going to go from 50% growth down to slightly negative or flat next year from an earnings expectation standpoint. The rationale is they're spending so much money on CapEx. These companies have gone from capital-light business to capital-intensive business. And the world has to see if that spending is actually going to drive results. So the canary in the coal mine is, will this ultimately happen? Now, I've known, Jimmy knows this especially, knows I've known Meta since December of 22.
I remember. I gave you a hard time, and I apologize.
I just like to hear it again sometimes. but anyway, this is the first time that I think we're seeing a real question around that with that deceleration, right? So how is the rest?
It's not. Well, we start with mobile, and then they spent a lot of money on mobile, right? Years ago when the stock was in the 30s or 40s, wherever it was, and earnings were okay, except in mobile, which is their biggest business now, were punk. So what they do, that same dialogue, they spent an awful lot. So you can't really go by that.
But Steve, you don't remember when they got tattooed for overspending? That's what gave us the buying opportunity.
I did. And so the market, I think, is smarter now. Like Gretzky said, I'm not, I'm not.
You're going to go to
I'm
the
not
puck.
where the puck is. I'm going to state where the puck's going to be. And if you don't invest in AI right now, which is going to transform everything we do,
totally
probably
agree.
3 to 5
I'm not
years,
fighting on
you're
that.
making a mistake.
It's my largest holding. You're telling me I'm making a mistake in my largest holding. I'm telling you what
No,
the
I'm not
question
telling you that.
is.
I'm telling you, what I'm telling you is your focus on slowing bottom line growth because of CapEx is misplaced.
I will tell you this. If the market starts to punish these big businesses, which is a possibility, I'm not saying it is, for overspending and not delivering on CapEx, you're going to see a virtuous cycle become a not so virtuous cycle like that. Not this year, but you will see it.
And it's my second largest position next to Taiwan Semi. But if that happens to Meta, then I will buy more and supersize the position, the extra as a trade.
Yeah.
What if before they take all of these guys down, which is the hypothesis you just put out there, what if they start to choose winners and losers? What if Llama doesn't meet up to the same expectations as Grok or OpenAI?
I think that could happen. I think you're a great question.
I think that might be happening right now. I mean, I'm not the expert on this, but I read in the news, and Llama just doesn't have the same uptake as Grok or OpenAI.
So we should hit the semis too. AMD is quite the story. It's a record high today. IBM says key quantum computing algorithm can run on conventional AMD chips. What, Kevin, is most interesting to me about this story is people talked about this company as being left behind by NVIDIA. Not that it was irrelevant, but that it just wasn't in the same ballpark. And Lisa Su, in the moves that they've made recently, now you can talk about circular deals here, there, and everywhere else and criticize that or raise it as a point of caution, but look at the move the stock has made. It's up 100% year to date. It's up 6% today. If this thing was sleeping or tranquilized for a while, it's up.
I'm as guilty as anyone for being somewhat tepid on AMD. We had a 1.6% position in it, and I would have argued we just haven't because I haven't gotten around to selling it yet. We own NVIDIA, we own Broadcom, Avago, and we own AMD in the growth portfolio for diversification's sake. And this is one of those examples where diversification pays off. If what we're hearing about the quantum chips is accurate, I mean, that's a game changer for all of these companies. You're seeing Intel, which more so left for dead than any stock I can remember, up today, and AMD on sympathy with that. But here is a situation where we own all three. All three have had some circular deals, as you mentioned. I think it's a lot different than what we saw in the late 90s, or at least the way I remember it. But this is a case for owning more than just one position in any one sector.
You see like a sideways move that this stock had made. It was a nothing. People always talked about NVIDIA and Broadcom as being the two best AI chip plays. You've heard less about Broadcom lately and more about AMD, which is why the stock chart looks the way it does.
Yeah, but the reason that stock chart goes vertical is OpenAI, right? And we saw the same thing with Broadcom and a few other, Oracle. That's where this comes home to roost, if you ask me. And the rhetorical question, Rob, that you asked a second ago about what happens when the whole world says maybe this spending isn't worth it. I mean, OpenAI is the engine of this whole ecosystem, so they better be raising funds. They better be showing some revenue to back up the $300 billion that just at Oracle they've promised. But that vertical leap there in AMD, that's OpenAI.
How about Qualcomm? I mentioned it because you bought more of it. Why did you pick that one to buy more of, Rob?
Well, it's just one of the most inexpensive ways to play the semiconductor space. High quality exposure. They're benefiting from connected devices, but they're also benefiting from the automobile sector, and it's only to 14 times forward PE. So this is one that's lagged, and who knows, maybe they get anointed at some point soon, too. That seems to be the way value has been unlocked for these businesses.
The power names around AI have been really interesting trade this week. They've been pretty volatile. The performance certainly differs depending on, look at that. I mean, does that show volatility or what? It shows some dispersion, too, in the way that these stocks have acted. Vertiv had earnings this week, record high today. Weiss, that's you.
Yep.
You've had Constellation and Eaton are up, but Nextera, EQT, and Vistra are down. bring up some of those too. So you bought GE Vernova.
I did.
As a new buy.
Yeah, and that's an example of what I'm doing with the proceeds from what, from, for example, from Alphabet. Now, look, it's hard to make the case that a company with this inflated valuation is on the bargain shelf, but I believe it is.
Stephanie Lick would agree with you 1,000% because she's a value investor. She's been in it for a long time, continues to make the case that, in fact, it is.
Yeah. So look, the target, at least that Goldman has, is about 750 based upon 30 times EBITDA. If you take a look at the EBITDA growth, it's awe-inspiring. Revenue growth is growing more than 10%. So I just thought it was a good opportunity to get in because the quarter was a very, very good quarter. And I think what's happening, as the quarter with Vertiv was a great quarter. So I think what's happening, take Vertiv, because it's an easy one to talk about. Short interest was maxed out. So I think what happens is that there's some games being played here where those with short positions are then coming in and selling more, or having others sell more to pressure the stock lower, and the market keys off. What that reversal is, gets nervous and sells it down. But then the shorts have to come in and cover. So I would say a lot of what you saw the last 2 days is short covering. We saw the same phenomena in GE Vernova. So you have to ignore the games. You have to ignore this really short-term price action and say, hey, what is the long-term fundamental case?
Yeah.
And then you go into
that's been a week, as they say, for that stock. So you have some new buys related to this that we want to get to as well. Vistra, I just mentioned that. Rob's been in it for a long, long time. Now it's a new buy for you. Why now?
I mean, all of the reasons that Steve just mentioned, we believe in the USA story in 2026, the American build-out. This is a beneficiary of all of these hyper spends that we talk about. So we're a little late to the game for sure, but we saw some weakness. We wanted to add this to the portfolio. We've had Duke Energy for a long time, traditional. We have that MCore in there, which I think is at 52-week highs today. But this is the stock that you've talked about. I think makes a lot of sense.
I will tell you, we're up 500% in a very short time in this name. And
I think it was last year's best performer in the S&P, right?
Which helped.
Yeah.
So it's funny. At the end of the year, we trimmed it. We bought NRG. That ended up being a great buy. Maybe not such a great trim because Easter continued to move. But it was about proper portfolio sizing, which Steve talked about. But we wanted to stay with the momentum in this space. There is massive power needs. It is not going away. These are ways to play it. And valuation is not going to matter until it does.
Mm-hmm. Yeah. The other moves you have, Kev, you bought Martin Marietta. That's a new one. And Walmart, too.
Yeah, I wanted to go as boring as possible since we've had so much fun with these high-flying growth momentum stocks. But Martin Marietta, if you think about just staying with that theme, Caterpillar, all of the data spend build out, it's stones, it's cement, it's all of the things that are necessary, which we believe are going to be incredibly profitable. It's a boring business, but their margins are accelerating.
I mean, you did buy more Caterpillar too, but what I think is most interesting is that, as I say, the Walmart buy, which is new, you look at it as a growthy name. In disguise.
So the catalyst for that was what they came out with ChatGPT. And the ability to have that kind of online access for consumers to be able to one-click spend. We paid a high multiple for Walmart and Costco as investors for some time. I think this continues to validate it. We had this stock called away, Scott, back about a year ago, last November, around $90 a share. Probably should have gotten into it in April. We bought a whole bunch of other names, kind of missed Walmart. Here's a situation where we don't want to sit on the sidelines, especially heading into holiday season.
Okay, so I mentioned, I mentioned that you did buy more Caterpillar, which brings me to the industrials, which have been basically flat over the last few months. The sector had been, right around new highs. It's just been sort of treading water at that level. I just do that, Rob, to get to your sale of 3M. The highest level since June of 2021 today. Just a profit-taking move?
It's a little more than that. We bought it just when Stephanie bought it, likely when Bill Brown took over as the CEO, we were very optimistic about the turnaround. Right now, it has a premium valuation relative to its growth rate. We benefited, though, from that trade. It's up 80%, more than double the S&P since we put it in. That's not long ago. That's like May of last year, I think. But it's still a cyclical company. And as you're restructuring a business and focused on new initiatives from an R&D perspective, you're investing in that business. This is going to hurt profitability, right, in the short run. And so we're just taking that money. We moved it into Qualcomm. We moved it into AbbVie, which we're going to talk about later in the show. And, you know, those are the areas that we think have a little more promise right now from this price point.
Let's do one more move before we take a break. And it's been in areas I said at the very beginning of the show, which is, you know, hung over the market a little bit, obviously, the private credit, private equity, alternative managers, which have had a pretty decent bounce back this week. Apollo and Ares are up nicely. Blackstone obviously had earnings yesterday. You bought Apollo.
I did buy Apollo. I've followed this stock for a long time now. It's still off 17% over the last 3 months on exactly the concerns that you raised, Scott. But so far, it really looks like those subprime auto bankruptcies are not systemic, and you can see that in high-yield spreads. You can see that in credit default swaps. You can see it in the recovery of regional banks. So now you've got an Apollo, a stock that's trading at roughly 14 times earnings. A couple of really important things here. There's a lot of dry powder with which Apollo can pounce on any companies that get into trouble. And that's both because of fundraising that they've done and their captive insurance arm. Last thing I'll say, and this is more qualitative than anything, but I just coincidentally happen to know a lot of people at Apollo, no insider trading, obviously. These are really smart people. When you talk to them, you get the idea that these are the guys who are moving the markets and that are going to benefit on whatever dislocations happen. So great price at which to enter it, and I'm in.
All right. We'll take the break. All right, we're back. We sort of gave this away, the AbbVie move. And I did say healthcare is the top sector over the past month, up 7.5%. The IBB, the biotech ETF, best month since July of 2024. The XBI, fifth straight positive month, best since 2015. So you're just riding the momentum here?
Correct. We owned the name.
Yep.
It's not like we didn't own it.
Yep.
We added to it. Thought it was pretty attractive. It trades at a very low forward PE. They are a leader in autoimmune and inflammatory. I don't know about you guys, but I ache quite a bit, so I believe in that. Skyrizi, Rinvoq, these are two of the largest markets in the pharma industry. We think this is an attractive place to be going forward and will be a beneficiary of some of the analytics that come out of AI. That was the thesis on the biotech space is, boy, is any place going to be impacted more than this area?
Not to mention the fact that it was hurt, the biotech space, by high rates.
Yes.
So these are rate plays, too. Rates
yes,
coming
they are,
down.
100%.
It's like sort of coincides. If you look, as rates start to come down, the biotech start to go up. You own this too, Abby, yeah?
Love this name. You left out the aesthetics portion of this business, Rob.
Well, I don't do anything aesthetically.
I'm just teasing. It's a minuscule part of the business. But, you know, as much as we've always talked about how cheap this stock is, it keeps going higher, and it's still cheap because it's growing its earnings. It's got a nice dividend yield. As you pointed out, a broad pipeline and a broad existing product array, which is indicative of how good this management is. They have found tuck-in acquisitions all along the way the last few years that have really worked out for them. Not all of them. They bought one company that had a blow up in the schizophrenia space, but for the most part, they make excellent acquisitions, still cheap, a great name.
Kevin, you bought more Merck. They report earnings next week, too.
Merck's also an acquisition story, and to your point, they're not all going to work out, but we've got a backfill where Keytruda is going to come off patent soon. The whole world knows it. The stock went from the 100s down into the 70s, started buying it in the 70s. We're enjoying a 4% dividend. It's a stock that even now has an amazing dividend, just starting to trade up. Sector's been out of favor for a long time. We like healthcare, we like biotech, and we think it's a place where the rest of the street's going to catch on.
Yeah, Piper Sandler today, biotech has a heartbeat. I think they joined just about everybody else saying that this move that we've seen looks legit in these stocks. I'm somewhat surprised that you're not here at all. United Health, I don't really count. You know what I'm saying?
It's a different segment of the market. Look, the market is, the perception is the market is going to be open for funding of biotech companies, and with rates coming down. Because what controls this sector, I'm talking about biotech more than anything else, are capital flows. So when you have lots of money that's looking for a home, and don't forget, this has been the most extended down cycle for biotech stocks that we've ever seen. It never was more than 1 year, and here we're really multi-years into it. So, and then when the capital flows tight in terms of going to new companies, IPOs, and secondaries, biotech comes down. So right now, you're in the capital flow positive side of that equation. So I think it can continue to move.
I mean, you have obviously the big downturn, you know, when you had Liberation Day, when everything else turned down, you're like, okay, well, we're going to have tariffs that are this large. These sold down pretty hard for the reasons that we just talked about, on the idea that if you're going to have tariffs that big, you're going to have rates that are going to remain elevated too. And then when that story started to change, you look at the chart, and that's when it really started to ramp up.
And there's one more point here, which maybe people get in front of early, is that the Trump administration is really embracing AI. The FDA is embracing AI. So if you can use AI, what the FDA has no idea what to do with now, I can tell you that from practical experience with them on something that's in front of them now. But if they can get their act together in AI, it will accelerate the trials and the approval of drugs. So AI is just going to have such a monstrous effect.
Okay, so we'll take a quick break. What's your final trade?
I like that gal you mentioned, by the way. Final
The one who works for your firm, New Edge?
Yes, her. Big week of earnings. Love Alphabet going into it. Cheapest of the Mag 7.
All right. Finally coiffed, Kev. What do you got?
I like Amazon heading into the earnings. We're expecting a lot out of AWS, and the profits that they're seeing in advertising no longer can be discounted.
All right, the farmer.
CRH, terrific stock, terrific company, still pretty much undiscovered.
Got some work on the ranch this weekend?
We may be calling them.
All right, good stuff. Steve Weiss.
You're such a dinosaur, that gal. IBIT. Look, they just broke the star player out of jail, literally, and I think that's going to help get it up, and it's based here at 110.
All right, I'll see you in a couple hours.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It's Sunday, October 26th, and, you know, this last Friday, there was... the market was up. It was up quite a bit. I did a members-only video yesterday that you might want to check out, just for members. In this video, we're going to cover what occurred on Friday. There were some clips from the halftime report. And basically, in this segment, we're also going to look at a number of stocks that they talked about on the show. I'll show you guys the list right here. First, we're going to look at, of course, the indices, like the SPY, the Qs, the Dow, the Russell, the Euro stocks. FEZ is a ticker symbol for that one. We'll take a look at about 17 stocks and ETFs that were discussed on Friday's episode of the Halftime Report. And we're going to review those. We're going to see whether or not which ones look strong, which ones look weak, which ones we should consider. We're going to look at the technicals on those, of course. We're going to look at Apple, Tesla, and Meta. We're going to also look at the strongest sectors, as well as some of our members' requests. We've got 4 stocks here that we will be covering. So let's get started here. We will start off with what happened in the market on Friday. You can see that market closed up. The Dow Jones, okay, up 1.01%. The NASDAQ was up 1.15%. S&P 500 up 0.79%. It basically just kind of gapped up and just went sideways the rest of the day, right? Same thing happened here with the Russell, up 1.22%. But basically just flat throughout the day. So they're really, most of the move happened, pre-market, and then it just kind of stayed in that range pretty much. So that's not really showing that much strength as far as confirmation like this move is going to definitely continue on Monday. But we're going to look at the individual stocks and see what happened here. Here's the heat map, and this shows us the S&P 500 stocks as well. And basically, you can see Tesla was down 3.4%, but the majority of stocks were up, like Nvidia, the big names, Broadcom, Google was up, Meta was up, Apple, Amazon, Microsoft. A lot of the financial stocks like JP Morgan, Bank of America, Wells Fargo was up, Morgan Stanley, and Goldman Sachs. But the consumer defensives were weak. So was energy. Look at the red there. For the energy stocks. Let's look at the sectors real quick. Oh, by the way, since it is the weekend, let's look at the 1 week performance. This is what it looked like for the week. All right, so Oracle was down 2.74. All right, ticker symbol TXN was down 4.22, but the majority of the stocks were up. You can see here that telecom services stocks like T-Mobile and AT&T were down. Netflix was down. Verizon was down. GEV was down. A lot of the consumer defenses were down. All right, let's look at the sectors real quick. Here we have the one-day performance for Friday, and you can see technology was in the lead, along with utilities, communication services, and financials. Energy down 0.7. Consumer defense was down again, down 0.38%. Here's the one-week performance. So the three laggards were utilities, consumer defenses, basic materials, but energy, technology, industrials were the top three. All right, and here's the 1 month performance. Healthcare, number one, up 8.31%. Isn't that interesting? Utilities and technology. So there's been a little bit of a sector rotation, you know. So yeah, technology and communication services were in the lead, and healthcare has moved its way up, as you can see there. Now, let's get into the indices first. We're going to look at the charts, and we're going to start off with the S&P 500, the SPY. Here it is, up 0.82%. Now, last video that I made, for you guys was on Thursday. I didn't make a video on Friday, so this is kind of like Friday's video. This information is still good for tomorrow, obviously. Market opens in the morning. So as you can see, we finally broke that 673.95 level. That's a level that I've been talking about for a little while. Price has been consolidating in this zone here for multiple weeks now, right? Multiple weeks. And so the question now, we're talking about mid-September, right? So that's a long time. And here we are for the first time, up 0.82%. Price finally broke that level. And it happened on slightly higher volume than on Thursday's price, okay? Thursday's volume. So that's very good news for the SPY. Here's the QQQ ETF, this one as well. All right, it actually kind of broke this ascending triangle pattern. Okay, so that's also bullish. Higher volume there. It looks like the directional movement index is also, moving its way up. It looks like it's about to cross. That's very bullish for the Qs, up 1.07%. Higher probability that we will see a continuation on Monday. Here's the Dow Jones also breaking above that high. Remember this candle here from that high was 470.38. We're above it. We're at 472.21. Still moving up. Higher volume on Friday than on Thursday. The ADX is moving up. The Dow Jones is looking pretty strong. Okay. What about the Russell 2000? Well, this one has not broken above a prior high here of 252.77. But it was up 1.22% on Friday. It did form a reversal candle. That candle right there, it's a red candle. So that's not ultra bullish. I'm not a big fan of that. But overall, Russell 2000 is also participating in this market move up. What about FEZ, the Euro stocks? That was only up 0.05%. So you can see the little candle that was formed on Friday. It was very small, red little candle. Nothing major. Did not break above that 63.60 level yet. That's what we're waiting for based on that prior high. The VIX was actually down again, down 5.38%. But look where it stalled, right at the bottom of the cloud here. Now, many times when price comes from above the cloud and into the cloud, it will find, it will stop and pause inside the cloud. That happens. The question is, will it break through and get back into those lower levels of around 16 and under? We shall see. But right now it's inside the cloud. This is a good sign. We want the volatility to be coming out of the market, and we want that fear to be coming out as well. That's what the VIX represents essentially. All right, let's take a look at the stocks they talked about on the halftime report. Some of the clips that we took there. They talked about, and by the way, I've got these all organized. I've already reviewed these stocks, okay? I put a little blue flag next to the strongest stocks to make it a little easier for you guys. So AMD, and I'll explain why these guys are blue flag and why the other stocks like Walmart and some of these other stocks like AbbVie did not, okay? Even VST was up 5.28%, but it still doesn't get a blue flag, and I'll explain why. So what we're looking for is for price essentially to be above we're using this indicator, the Ichimoku, right? We want price to be above the 9 period, above the 26 period, the red line there. We want it to be above the Ichimoku cloud. And we want that green line to be above the red line. We want that white line that you see there, that's called the Chiku span, which is today's closing price. Okay, if you project it 26, it's in a line form, but it's projected 26 periods into the past, right there. Okay, and if that line is above the candle 26 periods ago, like it is in this case, that's very bullish. So AMD is looking pretty good here. Now, here's the other cool thing that happened on Friday. You'll notice that it broke above this little level of resistance, right? Price kept on finding resistance around that area there multiple times, once, twice, 3, 4 times. Finally broke through. And you know what else happened that was important for AMD is that the volume. See how it's almost double the volume from the prior day on Thursday. So there's Thursday's candle, there's Friday's. I actually added this position. It's one of the few stocks that I'll share that's in the portfolio. So I added that on Friday. I added a number of other stocks on Friday. If you guys want to find out the complete list of stocks that I added and the complete list of stocks that I closed out of, you should consider becoming a member. Really easy. Just come to my channel here. Blue Cloud Trading is the YouTube channel. And in order to view this video, which is an hour and 16 minutes long, where I go over the entire portfolio, as well as 20 new stock ideas for the upcoming week that came up on my proprietary scanner. All right. I've got a buy scanner that utilizes Ichimoku on both the weekly and daily time frame, and it's got my own, I guess rules you can say, right? So it's proprietary, and it pops up very few stocks each day out of a list of over 6,000 stocks. So it's very specific. I'm looking for specific things in those stocks, and I share those. I share that screenshot with our legend level members. So how do you become a legend level member? You click on the join button, which is right next to the subscribe button. Scroll down, there it is. Okay, Blue Cloud Legend, daily trade updates posted, and it's actually going to be. You'll also get access to the exclusive member only videos, and you can also view the videos under Blue Cloud Trader, but you won't get the daily trade updates here. And if you want to support the channel, consider becoming a Blue Cloud supporter. So there are 3 different levels here. And you can help contribute so that this channel continues to stay, relevant and in existence on this platform of YouTube. We want Blue Cloud Trading to do well. 23,900 subscribers. We're almost at 24,000. Hit the subscribe button. It's free to do that. Hit the notification bell and share this video with someone if you'd like. Okay. All right, guys. Now. Let's do the following. We're going to go back and we're going to talk about the rest of these now. XBI is another one. Biotech ETF. They talked about that one. You can see here. Let's look at the weekly chart. Okay. By the way, I didn't show you the weekly chart on AMD. AMD looks great on the weekly too, right? Price is above the moving averages and the cloud is bullish, right? Here it is on the daily chart. Here's XBI. Biotech. This one looks good on the daily chart and on the weekly chart. The only thing is we do have a reversal candle here, so that sometimes can lead potentially to a pullback. It's basically stalling, right? We didn't take out the prior week's high. We actually stayed under it. You can see that right there. And we created this, what's called a spinning top pattern. And so if price gets into the low of that, expect it to drop a little bit. And it could drop as low down to the Tenkan-sen, which is in about 8.5% almost, 8.4% away. So just giving you a heads up about that. It's had a nice run, and it's still looking strong. Here's the daily chart. You can see that it's been stalling in this little area here. Let me just create a box for you right there. So I'd want to see it getting above these highs right here first, and that will prove itself. IBB is another ETF if you're looking to invest in biotech companies. Okay. So this one also above the moving averages, up 0.38%. It gets a blue flag. It's good on the daily and on the weekly chart. 3M looks good on the weekly. Look at this one. It actually broke above this high right here. Okay, that happened on Friday on higher volume. ADX is moving up. 3M looks good. Here's the daily chart. Not as good, right? So on the daily chart, what happened on Friday was price moved up and then started dropping. They call this a dark cloud cover pattern. If you're unfamiliar with it, let me show you what it looks like here with our cheat sheet. Okay, real quick. All right, let's zoom in on that. So you go into bearish double candle patterns. Here it is. It's called the dark cloud cover. And basically what happens is after a move up, like you see right here, where price has been moving up, 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 price gaps up to this level and then drops and closes within the body of the prior candle. So that is bearish, and that's exactly what's happened here. Price gapped up slightly to that level there, dropped, closed within the body. What does that mean? Well, it means that there's a higher probability that price will pull back maybe on Monday or Tuesday. It was down 1.81%, right, on Friday, so that's something to keep in mind. Let's take a look at the next one, Caterpillar. This one also got a blue flag. Now this one just barely closed above the Tenkan-sen. The closing price was 522.73, and the Tenkan-sen was at 522. So it's only 73 cents above the 9-period moving average. But as you can see, it's still looking bullish here on the daily and on the weekly. All right, another reversal type candle. XLI has been stalling under that 155.94. That's Industrials ETF. Okay, so this ETF, it looks like it's getting ready to pop, but we don't have that confirmation yet. So I'd be waiting for that. That's the weekly chart. Here's the daily chart also. Okay. We've got VRT, another one that got the blue flag because price is above the moving averages in the cloud. And it looks, it also actually got above, it looks like these highs here. But this is not a conclusive type breakout. If you notice what's happened is it's a spinning top, a reversal candle, happened on lower volume, not very convincing, but it did break that level nonetheless. So I'd be watching that one closer. Here's a weekly chart, still moving up. The rest of these stocks, there's something wrong technically on either the daily or the weekly chart, like Walmart, as I'll show you in a few moments, and then I'll explain why it did not get a blue flag. So here's a weekly chart. And on the weekly chart, it actually doesn't look terrible at all, right? It's actually above the 105.30 level. Everything looks pretty bullish here for Walmart on the weekly chart. But if we switch it to a daily, it just barely closed. You can't really see, but it actually closed barely under. So the price here was 106.17, and the Tenkan-sen, the 9-period, was at 106.23. It's a small, minute difference there. Overall, this is still a very strong uptrend. You might want to wait to see if some of the momentum can come back into this. You can see this little trend line that's actually starting to develop here. The ADX has been pulling back. That's the white line. That represents momentum. So the momentum is coming out of this. And so ideally you want to see a volume break above the 50-day moving average here. So I'd want to see a much more bullish day with the volume breaking above that 50-day moving average and the ADX moving up, which is not happening quite yet. VST, all right, this one, this is Vistra. So this one, you can see the cloud actually is very flat right here. Both the Senko Span A and the Senko Span B are at the exact same level. And that's, it's not very conclusive. One of the other things I noticed is the faster moving average, the Tenkan-sen, is currently under the Kijun-sen. So the 9 is under the 26. And then the Chikou span, remember I said earlier how the white line should be above the candle 26 periods ago? That's not the case in this one. So this one does not pass the test. So I'd hold off on that. Here's the weekly chart, staying above that Tenkan-sen here, and it was up 5.28%, but I'm also seeing that negative DI crossing above positive DI. So I don't like Vistra as much. UNH is under the Ichimoku cloud. One of the rules of the indicator is that you should not be adding positions when price is underneath the cloud. You can manage a position that you might be holding. So like right now, for example, in the weekly chart, it has been moving up. You can see a bullish crossover here, Tenkan-sen above Kijun-sen. On the daily chart, its price is above the cloud. It's above the moving averages here. Everything looks good on the daily except for that 200-day. So the 200-day moving average is the dotted yellow line that you see there. Okay. And how far away from that are we? We're about 6.5% almost away. But when you don't have confirmation on the weekly, I certainly wouldn't be considering it. Let's look at GEV. Here's the weekly chart under the Tenkan. I'd skip this one as well. Here's the daily chart under the cloud. No on GE Vernova. All right, and if you look closely from this high here, we're actually kind of sloping downwards here. Okay, that's a little slight slope. So we got a lower high here from that prior high. And the other thing also that I would mention real quick, if we go right there, okay, so it's finding some support in this area here. It's just moving sideways here. I'd stay out of this one as well. All right. APO is Apollo Asset Management. That one's declining as well. Still under the cloud. No on that one. AbbVie, we had a recent crossover, negative crossover. The green line, the 9 period is under the slower one. Stay out of that one too, folks, for now. The weekly chart still looks good. Okay, still looks very bullish. It looks like it's finding support there, but on the daily chart, it's showing some weakness here. I would not be adding a position here. You could certainly manage that position though. QCOM. We've got a bearish pattern here. The dark cloud cover once again with the price gapping up and then dropping and closing within the body. Down 0.64%. If you look at this on a 5-minute chart, it gives you a little bit more insight. Here it is. That's the 5-minute. So there's the gap up, drop, moved back up, creating a lower high, okay, right there from the prior one. And then we also took out that low right there. So we got a lower high, lower low. I would stay out of Qualcomm. Here's MRK. Let's look at this one on the daily chart. Looks pretty good on the daily. Doesn't look terrible. But what does it look like on the weekly chart? Under the cloud. All right, so it's been stalling multiple weeks now, right under there. It's finding resistance at the cloud. I'd stay out of that one for now. There was a positive thing that happened here. Tenkan crossed above Kijinsen. You know, usually these are maybe some of the earliest signs that this thing could potentially break into the cloud. And if it does, then it's got some room to run, right, within the cloud itself. So the 200-day moving average is about 13% away from where we currently are. So that's what I'd be saying about that. MLM, Martin Marietta Materials. Okay, you can see that it's been stalling at this 633.23. Here's the prior high. You can see it almost got there last time there, and then over here we had a shooting star candle, and that's led to another decline. Now it was up 0.30%, okay, on the daily. So let's look at the daily chart. There's the daily chart, but I would hold off on this one too. Doesn't look ultra bullish. And then we've got IBIT. This was Steve Weiss's final trade back on September 3rd, and then also today. I'm sorry, on not October 26th, but on the 24th. Sorry, that was on Friday. So IBIT, okay, IBIT. What's going on with Bitcoin? Here's the weekly chart. It's been just kind of stuck in this little range here, right? It's been stuck in this range. And it's still holding up above the Kijinsen, the 26. That's a good sign. In between the two moving averages, I think it's trying to make a run up. It was up 0.43% on Friday. Let's look at the daily chart. Yeah, it moved up a little bit, but it's still under the cloud. Okay, so it's just sideways action here right now. Nothing to see. All right, let's run through the Apple. Let's take a look at Apple real quick. Apple up 1.25%, staying above that 260.10 level. Seems to be stalling at this prior high here. Okay, but overall, Apple looks pretty bullish both on the weekly chart and on the daily chart. It broke through that prior high of 260.10. You know, personally, I don't have a position in Apple. I've talked about that in the past, but yeah. So there's Apple for you. Here's Tesla. Tenkan is under Kijinsen. That's bearish. The negative DI is above positive DI. All right, so the red line there is above the green line. That's not good. Price dropped 3.4% on Friday. There's the candle. This here is called a bearish harami. These two candles. All right, that's also not good. So daily chart doesn't look ultra bullish at all. Here's the weekly chart, just kind of stalling, right? We get that trend line, downward slope, and it's just moving sideways. Nothing special happening. How about Meta? It's under the Tenkan-sen, up 0.59% on Friday. This is the weekly chart that we're looking at first, and here's the daily, under the cloud. So I would not be touching Meta either. All right, now let's talk about the strongest sectors. SMH is one of them. Semiconductors. Okay, SMH popped above the 350.05. That's a good sign. What I don't like is the type of candle that formed. It's not really ultra bullish, and the volume wasn't really, confirming it. It was about the same volume as it was on Thursday. What about XBI? That's biotech. Well, we already talked about that one. That looks pretty good on the daily and the weekly, but it's also a reversal type candle there. Okay. XLI is industrials. I think we already talked about that one. Yeah, we did talk about that. It was one of the stocks that they brought up. So we talked about that. XLK we did not talk about. So this is technology ETF. And this one here popped above the 291.34 level. That's bullish. I like this slightly more than some of those other ones because it's a nice little bullish candle. But again, the volume's not super strong here. The positive DI did cross above the negative DI though. So that's good for XLK. I did a more thorough analysis also in the members only video that I did this weekend on the sectors. And I basically look at a much larger group of stocks, okay, through TC2000. So it's a more in-depth analysis of the sectors and industries. And then what I do is I basically break it down further to the strongest stocks within the strongest industries, okay? So I do a top-down approach, and that's how I identify the stocks that I recommend and the stocks that I add, a good number of them that I add to my portfolio. Real estate, XLRE, actually was up on the daily chart here, up 0.35% on Friday. Now, this particular ETF, all right, it has some resistance levels that it needs to go through. Let's look at the weekly chart first. Here's the weekly. So you can see very, very clearly that it's been stuck right in that little range, just staying in there. Will it break through? I think there's a higher probability now, that real estate is going to start taking off. And the reason I say that is because interest rates are going to start coming down. And so once that occurs, I think that's going to help boost this sector. Okay, there's the weekly chart. The cloud is starting to become a little bullish, as you can see here. Sequence band A moving up. The positive DI is moving up. Negative DI is moving down on the weekly chart. We had a recent, it looks like the Kijun-sen's moving up. The Tenkan-sen is moving up. I like that. Chikou span is above price. So all of these things in the weekly looks good. And on the daily chart, it also looks good. It took out this prior high. Well, actually it did not. I take that back. Let me just, let's find out what this high here, was 42.65. We closed right on that level. So we got above it and closed right at 42.65. So let me just make sure I get that right. Yeah. Whoops. There we go. Okay. So it's not a bullish candle. Okay. But overall, it's breaking through that prior high. It's going to have some more resistance over here, 42.97 or so. And then it might start to climb after that. What about XLV healthcare? This one also stalling at 146.13. So that this particular ETF is not looking super strong here. But again, the other analysis that I did on other healthcare stocks was looking quite different. All right, let's look at the members request, guys, because I'm not going to cover the rest of the stocks. These are not as strong. We're going to go into. I did cover gold, by the way, in the weekend video. You might want to check out the members only video. I did cover gold and silver. All right, SDCI is the Summer Haven Dynamic Commodity Strategy, no K1 fund. So if you don't want to have to file that K1 form with your taxes, this is something that you can invest in, SDCI. Okay, here's a weekly chart, looking pretty bullish. actually, on the weekly chart. Nice strong uptrend for the year. How's it doing since January 3rd? It is up approximately 18.9%. So it looks pretty good on the weekly chart. Nothing negative here. On the daily chart, it looks like we've, we broke above that level, these highs here. Got that reversal candle, and it's pulling back. It was down 0.6%. But, everything looks good still technically. We got Chico span above price. Senko span A is above Senko span B. The Tenkan-sen is above Kijun-sen. It might be a short-lived little pullback. It might drop another 0.9%. That's about where we are. That's how far we are from these moving averages. So overall, I like it. Archer, ACHR, has pulled back and finding support of the cloud. It bounced off of it today. I'm sorry, on Friday. Now, that's the daily chart. It's currently under the moving averages, so we don't have a buy signal here. But let's look at the weekly chart and see where that's at. So on the weekly chart, it looks like, let's find out the closing price, 11.29, and so it's under both of the moving averages. But on the weekly chart, you can see there was a little bit of buying happening here towards the end of the day. Or the last few days. That's what that long wick represents. So if you go to the daily chart, you can see how price stalled right there on Thursday and then moved up. So this is better than average chance that price will continue moving up here based on that, what I'm seeing right there. But I certainly wouldn't be adding new positions here. Price is still under these moving averages. PSIX, let's start with the weekly chart first. So weekly chart, we came here on September 26th, 121.78 level. That's based on that shooting star. And it dropped. Now it found support right on the 26 period this week, and then it started getting bought up towards the end of the week, up 3.78% on Friday. So here's the daily chart. You can see those 3 last days. The problem here is that it's kind of starting to get embedded here in this decline, right, on the daily chart. So there's the downward channel that you see right there. Negative DI is still moving up slightly. We did take out this low. Okay, looks like it stalled right at that level. I'd be watching this very closely. Here's another low right here. Let's get the exact dollar amount of that low right here, which is 75.04. Okay. So how would I be managing it? I don't have a position in this, but if I did, this is what I would be doing. I'd be watching it really closely because it's very likely that, okay, we've built a range here. And so we're in the bottom part of the range, right, based on these lows. And so now its price is moving up. I'd be watching it really closely and see if it can continue moving up. If it breaks below 75.04, I'd be really concerned about that because that's that prior low. Here's the weekly chart again. All right, so just watch it closely. Watch that Kijun-sen. The Kijun-sen is at 73.02. But yeah, it's starting to show a little strength. TOST. Let's look at this one on the weekly chart. This one's pulled back and bouncing on the weekly chart above the, got above the cloud here for a second week. And the cloud looks bullish still, but we do have a negative crossover. Tenkan-sen under Kijun-sen daily chart. It's inside the cloud. So we don't have any true direction here. TOST was one of Josh Brown's final trades back on August 13th, August 26th. Has not done that well here. You can see from the highs back on August 5th, it has dropped approximately 30% or so. Okay, that's a big drop. Nothing positive happens when price gets under the cloud or inside the cloud generally. Okay, so right now though, after a big drop, if it enters the cloud after the drop, that's actually quite bullish. We also had a recent that's a 4-hour chart that we're looking at. Here's a daily. So yeah, you can also utilize shorter time frames like a 4-hour. Okay, you can see how TOST has entered the cloud. If you look at the 2-hour, it's emerged out of that cloud so it was embedded under this cloud here since this candle from August 5th, right? Notice on the 4-hour, stayed under over here at the top of the cloud, dropped, came back to the top of the cloud, dropped, came back to the cloud here and dropped, came up to the 200-day moving average on the 2-hour time frame here and dropped, but it's above the cloud, you know, so it's starting to show a little bit more strength in my opinion. Here's a 1 hour. All right, we got a bullish cloud and everything else, so I'd be managing this more if you have a position in this more in a shorter time frame, because the weekly chart is starting to show a little bit of strength, but the daily chart does look pretty bearish here. If it gets under the Tenkan, once again, it's probably going to continue pulling back. So that's what I'd be watching. And that, folks, is going to do it for this video. I hope you enjoyed it. Hope you learned a few things about Ichimoku and how I utilize it. I mean, everyone, you know, there's different rules. Some people like to purchase stocks when price is under the cloud. Now, I don't like to take that chance. I'm looking for a price to break through. It's going to show me, it's going to give me some proof that this thing is, you know, the downtrend is over. Why? Because a downtrend can last for a long time. Look at this one back here in 2021 for Toast. From these highs here, it had dropped approximately 85% in 8.3 months. So you don't want to be holding the bag on a stock that continues to drop for extended periods of time. You can go back in time for the, let's look at the S&P 500, for example. I'll just give you a quick little thing here on the monthly chart. We'll go back to 2008 for a moment. I just want to show you what it looked like on the monthly chart right there in 2008. You know, things started to show weakness here back in January 31st of 2008. Price got under the moving averages on the monthly chart, and then it proceeded to drop approximately 51%. We're talking about the S&P 500. A lot of you guys probably remember 2008, right? Remember the portfolios dropping half, 50%. So by utilizing Ichimoku, it can help keep you out of the market when it's appropriate to be in cash, right? Maybe there's another sector that's going up when SPY is going down, all right? And so you can focus on that instead. But when do you know that things are over? When do you know that all the chaos is over? Generally, when price finally you start seeing the first signs, of course, are going to be when price, finally breaks above the Tenkan. There's the first step. Step number 2, you see the crossover, right? Right there. Tenkan got above the Kijun there. Price got above both of the moving averages. Then it got above the cloud, right? Once it gets above the cloud, then you can see how it can lead to a nice continued up move. And it hasn't looked back, has it? If you just look at the monthly chart, since that time frame, we're talking about 2000, when was that exactly? 2011? Wait, hold on. On the monthly chart, 2010. So December 31st, 2010 on a monthly is when it started to, since then, the market has moved up about 125.46%. So that's a pretty big move. Anyway, guys, that's going to do it for this video. Like I said, hope you enjoyed this video. Don't forget to like, subscribe, consider becoming a member by hitting that by hitting the join button, which is right here. Once you've joined, there'll be a new tab that pops up, and it will look like this, membership. That's where you'll find the posts that I place, okay? All right, have a good rest of the evening. I will catch you all in the next one.